Hi there, Serial Trader here. Let's have a look at the major US indices, and we'll start off with SPX. So we've pushed higher still, and this starts to bring into question, how likely is it that we are going to come all the way back down and test or take out those lows. So currently this chart, I have it labeled, with the 1-2, 1-2 count in play, implying that, whenever we do find a top here, we're come down hard in this, wave 3 of 3. Now that is still possible, but it's lost a little bit of its credibility here because of the subdivisions of the structure. So here it's labeled WXY, double zigzag up. It's not looking that high confidence at this point as far as the subdivisions, and I'll go to the other chart to dig into that. But here we do have the 786 retracement of this December leg down. That comes in at 2703, so right around 2700. Got as high as 2690, 44 today, so it wouldn't be surprising at all to come up and nick that area or somewhere in that range. We are now right up against this base channel I've drawn, connecting the origin of the decline from the all-time high to the first major corrective bounce here, and just extending that out forwards. So we're right there at that line. Might be an interesting place to fail near that 786, but again, no sign of failure here yet on a short-term basis. So this wave count, while still technically valid as long as we do stay below that level at 2818, it's starting to lose its likelihood. And I'll look at something else. So here's a bullish alternate count. So this counts us, we have 5 down, 3 up, 5 down for just an ABC. And now we're, nearing the completion of our first impulse wave off the bottom for a new bullish uptrend. Now, even in this scenario, again, whenever we do find a top here, likely soon, especially the month, here, let me maximize this. The month is coming to an end here tomorrow, and you do typically get good pivots towards the end of a month or the beginning of a new month. There's kind of a sweet spot there where you form significant highs or lows for the month when you transition to a new month. So we'll watch for that. Looks like we should be forming a fairly significant high here soon, and then looking for a decline. But in this case, whatever decline we get would be corrective, and you'd want to see it come down in a familiar kind of zigzag or some other corrective pattern, and you'd want to come into the pocket here. So I'm just, not to say this move is done yet, but let's just say it was done here today. I've just put up some common Fibonacci retracement levels, so the 382, 50, and the 618. So coming down here somewhere into the pocket, that would still be a nice decline to exit some bad shorts that are currently on, if you're in that situation, or look to get long for this next impulse wave up. So certainly not the time to be going long here. I still haven't added to any short positions. I may do so once we get some sort of a sell signal and we can actually start selling off, but I'll be viewing whatever decline we get after we're done going up here as an opportunity, at least, to get out of the previous bearish positions I put on. And I'm certainly glad I bought into March there on the SPY puts to give enough time for this to play out. Certainly shorter term puts would have been a disaster, going against this wave up here. But yeah, if this does play out this way, and we really do just have ABC down, a 3-way move down, and we're starting another bull run to new highs, if this is the scenario, if we get a nice familiar looking 3-way pullback after this nice impulse off the bottom, that's going to be a fantastic long opportunity. But here, you don't go long here. You're really chasing at this point. We have a mature looking, what looks like a pretty decent 5-wave advance. So yeah, this is not the place to be going long. If you are long, I'd be trimming or exiting here myself, but and looking to establish some bearish positions even in this overall bullish scenario. That seems to be the play, the high probability play at this point. Now I just want to go into this because you know, we had this sideways move. So basically, since what's this date here where we peaked? That was on the 18th of January. So that's where we had that initial high at 2675.47. Then we had a move down, a move up, move down, move up, move down, and then we had a thrust out. So we actually had a nice A, B, C, D, E contracting triangle, wave 4, and now we're coming up in that final 5th wave. So a triangle does precede the final move in a sequence. In this case, triangle wave 4 would precede impulse wave 5 to finish off this larger, and you can see this is the same structure here, this A, B, C, D, E triangle thrust up. So to finish off this larger initial impulse wave off the bottom, if that's what we're forming here, certainly you can count the 5 distinct legs. You have a move up in wave 1, you have a 3-wave decline in wave 2, you have a move up in wave 3, you have a sideways triangle in wave 4, so you have good alternation between wave 2 and wave 4. So wave 2 is sharp and wave 4 is sideways, so that's following the guideline of alternation quite well. And then of course we're going to have our final impulse wave up for wave 5 of possibly a larger one in this bullish alternate scenario, which might become the preferred count here. It's really going to depend between this bearish scenario I have laid out here and this bullish scenario here. It's really going to depend what the decline looks like once we get it. If we just come down hard and go, you know, way past the pocket, those retracements, and start getting close to the low, well, at that point, you know, okay, likely we are coming down in this more bearish 3 of 3 scenario. But again, if we just have a nice corrective decline, distinct 3-leg, you know, 3-wave decline in this Fibonacci zone, that's going to be the signal that, okay, we got our 5 up. This is our first 3 down, our first major higher low after, you know, setting that high off the bottom, and then go long for that, you know, potential wave 3 at that point. So it'll be interesting how this plays out. Short term, any day now we should find a peak, and again, it should be soon as we're approaching that transition period between the end of the month and the beginning of a new month. So with that laid out there, let's go to the candlestick chart on Thinkorswim just to check that out. And okay, so it's interesting here on the candlesticks. Earlier in the week, hang on, just trying to get my cursor to work. Okay, earlier in the week we had what could have been an island reversal, and it was certainly looking promising for that. And that was where we had a price gap on either side of this this day of trading. And had that held, that would have been a very nice reversal signal. So we had that potential island gap reversal. So you have a gap up, you have a, you know, trading range, and then a gap down, and no space in between those two gaps where price did not trade, right? So then that gap did hold yesterday, but then today that completely got erased, and, you know, we went up and made new highs. So we had a potential island gap reversal that's been invalidated, and still all the while holding above this T line. So from a short-term, you know, candlestick perspective here, daily candlestick perspective, still no sell signals. Certainly be watching for one. We are, again, we're getting right up to the underside of this upper channel, so that could be an interesting area to fail at. We also have the 786 retracement, as I pointed out on the other chart, right around 2700 there. And then there is that 200-day moving average up here at 2740. So whether we get there or not remains to be seen. But at this point, you can't rule it out, as we are in a, you know, minor degree wave 5 of this overall impulse wave up. I would suspect it'll terminate sooner than the 200-day moving average, but certainly can't rule that out. Okay, so that's SPX. And we'll go to the Dow Jones Industrial Average. Let's have a look here at the Dow. Okay, so the Dow came right up to its 786 retracement of that December leg down. Basically just touched it and then rejected it intraday. The Dow also kind of just sitting right on its 200-day moving average as well, so that's a nice confluence. You got the 200 daily, and you have the 786, and you have the upper side of this channel that we've been in. So this is an interesting place. Potentially you got to pivot on the Dow, but again, you want to see at least some sort of sell signal before attempting to put in a fresh short here. But again, that doesn't mean you should go long here either. It's kind of just that transitionary period when you're looking for a trend to change. You could scale into a short. That's probably a decent idea. You know, not putting on too much size on the initial entry. But going long here, I mean, that's just what's your risk reward going long? I mean, where do you put your stop? The stop would be pretty far away at this point, and you also have this gap looming to be filled, and gaps tend to get filled pretty much every time on these indices. So yeah, it's not a good risk reward for going long here, that's for sure. And expecting, you know, a good retracement, just like we are in SPX. Okay, so that's the Dow. Now on the NASDAQ composite, let's have a look here. So NASDAQ composite also had that island reversal feature the SPX had, but again, we eradicated that today. And in fact, if I come in closer, we had that island reversal, and we had a bearish engulfing candlestick yesterday, and it closed below the T line. So that was looking pretty attractive for a sell signal. And then, no, today invalidated, and we went up and made new highs. So we're up here at the 786 retracement on the NASDAQ, just about there anyways. That's at 7209.09. We got as high as 7201, so just about there. The 200-day moving average is a lot further away in the NASDAQ. I kind of doubt we get there, as that will be putting us right up about that December high we had. So if we hit the 200 of the NASDAQ, that's almost just about invalidating the bearish scenario that I laid out on SPX. And all the indices basically have a similar wave count at this point, so no need to go through that. We are also slightly above this upper channel line here on the NASDAQ, so just a confluence of areas to get a reaction. But it can still go up until it doesn't. There's no sell signal here, so if you're going to try and position for a bear play, scale into it, because you're not likely to pick the exact top, and take that from someone who's failed at that many times. Hey, sometimes you nail the top and it's great, but more often than not, you try to catch a top or a bottom, you're not going to catch the exact point. So best to scale the order into smaller segments. Okay, so that's the NASDAQ. Really similar situation. You have a potential 5 up off the bottom, and you know, the next interesting point from a trading perspective will be, what does the pullback look like? Is it just a pullback, or do we just tank? That's going to be the story. And February could be the month where that story gets answered. Okay, now the VIX. Somewhat interesting on the VIX. So we've not made new lows on the VIX just yet. We're right there. So we had this pivot on the VIX here at the low of 1717. So here we went as low as 1731, and then today went as low as 1754. So slightly higher low. So you have a move up, a slightly higher low, a lower high, a slightly higher low. So VIX kind of holding firm here, hovering just above its 200-day moving average as well. So I still like the idea of getting a bottom fishing play here on VIX. I'm still holding the February VIX calls, the 16 strikes. So if we do even just get a reasonable pullback on the indices in February, you'll see VIX come up and at least make a lower high below what we made over here in the 30s, and that could still be a nice long volatility play to catch that. So I kind of like that even though the indices made new highs today, VIX didn't make new lows. That could be a good sign that there's still more of a bigger pullback in the cards here. It just has to materialize. Okay, so that's VIX. And we'll look at that VIX VVIX tool, and again, still no confirmed signal here. So VVIX and VIX, I think there is a slight divergence here to point out, and that would be step one of getting a signal. So here on VVIX, you made a lower low, Whereas here on VIX, you made a slightly higher low, at least for now. So that's, again, step one of getting a sell signal. And step two would be getting, after making this divergence, getting above the red moving average here on VVIX. And then the final, the final step for getting the confirmed signal will be after that happens, getting the SPX down below this blue moving average, which currently sits at about 26.50. So I'll be watching this tool to see if we can get a confirmed sell signal, as that will probably confirm the kickoff of at least that retracement downwards in the bullish scenario, or something larger if we are in that more bearish 1-2-1-2 scenario. But for now, just watching and waiting. I don't think I'm going to put any more into the the bear plays, SPY puts, unless I get a confirmed sell signal here. And all right, well, we'll look at the indices as things develop at the end of the week there, or on the weekend, and certainly next week. I'll be watching to see what happens, being that a new month will have begun. All right, Serial Trader signing off.